All right, welcome to lecture number 4, leverage. Let's talk about leverage. You've probably heard about it many times. You might be confused about it just because of how many different people describe it in many different ways. And this is usually a theme when it comes to just the trading world in general. A lot of people tend to overcomplicate certain concepts just to look or sound more professional or more smart or whatever, more intelligent than what they actually are. Me, I have nothing to gain from looking more smart. I'm already pretty smart myself, so I don't need to overcomplicate things. And also, I believe that understanding things is a lot more important than seeming in a different way than what you actually are. My goal is for my students, for you guys, to understand the things that I'm saying. For me to just sound more smart or more professional, it literally brings me zero benefits. So let's talk about leverage in the most simple and basic way possible, because that's essentially what it is. Leverage is essentially the reason why most traders will end up blowing their account. Leverage is simply borrowing power from your broker, which means, let's just say you open an account and you have a 1 to 100 leverage, which means that if you have $1,000, you are able to control over $100,000. Now, this will not change how much you can actually win. The wins are still going to be the same, but it will change how fast you can actually lose, how fast you can blow your account. The higher the leverage, the higher the exposure. For example, if with a 1 to 100 leverage, a 1% move against you can mean 100% loss of your account. Now, it doesn't mean that if you risk 1%, you're going to be losing 100% of your account. It just means that the leverage itself, the buying power, is potentially willing to wipe your entire account away. And this is exactly why most traders just end up blowing their account, because they are over leveraging, they are risking more than what they should, trying to make more profit, and in the end they just end up losing faster and quicker, and you get that MetaTrader sound of just, I'm sure you guys, some of you guys have unfortunately heard it, where you just look and you've been liquidated, your account is no longer available because you have lost all your money. Now, the way smart traders use leverage is you use it just to open your trades, but you still manage your risk. We don't worry about leverage. Like, my recommendation is always having at least 1 to 100 leverage, just because, so you can open the trades. But in most cases, even 1 to 50, 1 to 30 should be just enough. With the way we manage our risk, with how small our risk sizes actually are, you're not going to need the biggest leverage in the world. Now, if you open multiple positions, for example, if you trade multiple pairs, in that case, maybe 1 to 30 might not be enough. So I would strongly advise 1 to 100 is perfectly fine. You do not need to worry about anything else. Look for a broker that has at least 1 to 100 leverage, and you're going to be perfectly fine when it comes to trading the TRS. So we do not rely on high leverage. We rely on precision, on making the correct analysis, and on risk management. That is the most important thing. We do not have to say, oh, I need a 1 to 1,000 leverage so I can flip my account into oblivion. No, we are here to do this in a professional way. You're here to learn how to act like a professional trader, how you can become a professional trader. And I am a professional trader, so you better listen to what I'm actually saying to you. Leverage is not the most complicated concept in the world. So now that you understand this, we got this out of the way, you understand what brokers are. Let's move on to the next lesson, where we talk about lot sizes.